So I'm here at Super Return US East with Steve Pagliuca, co-chairman of Bain Capital. Steve, thanks for joining us today.
It's great to be here.
So we're going to talk about North America in the context of global private equity trends. So as we know, the global PE industry is sitting on record levels of dry powder. There's $1.2 trillion in North America, according to data provider Preqin. Looking ahead, the industry is on pace to raise more than $180 billion in the US by the end of this year. Do you think PE is getting ahead of itself in terms of fundraising?
Well, Phil, that's a really interesting question. And the first time I got that question was 1990. And they said there'd been record fundraising in 1990. I had started in the industry in 1989, so I said, oh, my career is over. There's just too many people doing this, too much money, chasing too few deals. I got the question in 2000, got the question in 2010, and now the question again, another decade later. I think what it really says is that the private equity model has delivered great returns for investors. And since in 1989, when I started in it, the firms have really had value-added capabilities. The governance model works well with these companies. And there are some companies that are more amenable to being private when they're going through some transition. The public markets don't treat them well if they miss earnings by 1 cent, if they want to make long-term investments. So I think what the data really says to me is no question it's competitive, but it's always been competitive. But the business model of having private equity firms go in and transform companies is very robust, it's worked, and it's globalized, and that's why the dollars have grown. Okay.
Well, related to that, along with the record fundraising, the past 5 years have resulted in unprecedented distributions back to investors, as reported in the most recent Bain Company private equity report. While we can't break new records every year, is the expectation that the significant flow of capital to investors in North America and elsewhere will continue?
Well, obviously that was a record year, although there have been several record years before that as well. And part of that speaks to the number of people and the market share that private equity has in buying companies right now. I think there are probably 25% less public companies now than there were 20 years ago, because many of them have gone private. Secondly, many companies used to raise money and they go public very quickly as a small company. Now you've seen companies like Uber, Facebook, they stay private a long period of time before they go public. So that's another dynamic where lots of capital has gone into the Ubers of the world and Lyfts of the world before they go public a long time out. So part of the volume is just the fact there's more private equity out there. Part of it is there's been good markets. I'm sure that will moderate, because the markets won't stay up forever, but we've had a great 10-year run, literally 10-year run, certainly in the United States, since the crisis. When that ends, nobody knows, but until then, there's been very robust distributions to LPs, which they like.
Okay. So just looking globally, there's no shortage of possible disruptions to PE and other industries. What do you think will be the impact on North American private equity of Brexit, of the ongoing trade wars with China and with Mexico, and the World Bank downgrading its global economic outlook?
Well, I would characterize this last 4 or 5 year period as we've had record high pricing, record high multiples for companies, which means you need to proceed with caution. You really need to buy businesses that you think you can transform in some way. So in terms of those exogenous shocks, yeah, we've seen a lot of volatility. You see the stock markets go up and down. The good news, certainly in North American private equity, if you look at America, there's been I'll call the oil dividends going on for the last 7 or 8 years, where oil prices are low. That's been great for America. Interest rates have been low, and the companies have grown very rapidly. So there's been great performance. As to when that will end and what causes that recession, I don't know. I'm sure we'll be in a recession at some point. But what private equity has done to mitigate that is the capital structures are very flexible now. Back 20 years ago, a small technical violation could put a company in bankruptcy. Right now they're covenant light or no covenant loans. So private equity has the capability of having a longer-term perspective, not having the company have financial problems even though it is levered. So you didn't see in the crisis, actually very few private equity companies declare chapter. You can count them on a couple of handfuls out of the many, many deals done. That's because A, more equity's gone into the deals, and B, the capital structures are a lot more patient. So we haven't seen that cycle we saw in the 90s and the early 2000s since then. So I'm confident that the model will work and it's better and we'll get through whatever that next period is. And people are factoring that into their analysis as we look at deals every day.
Okay. So in light of those growing trade tensions and the possible weakened economy, the Fed Chairman Jerome Powell last week signaled a possible cut in interest rates this year. How do you believe such a cut would impact the North American PE market?
Well, most of the PE firms spend an awful lot of time on micro analysis, and then they do a macro overlay. That's what we do. And obviously that's very important. You wouldn't want to buy a company and then not realize that Brexit would affect it, or the China trade war dynamics might affect it. So we do the macro overlay, and then we say, have we paid the right price to reflect those risks there, or do we not even want to take those kinds of risks? So I would say that an interest rate rise, interest rates have been at record low levels, and even with a slight rise, they're still at low levels in terms of my lifetime of the business. When I got out of business school, I think they were charging 14 or 15% for a home mortgage in 1982. If that's unheard of today, you're getting home mortgages for 4%. So we've been in a relatively low space. If interest rates go up, I don't think it's going to have a material effect on private equity, or the economy. And who knows what will happen, because it seems like the Fed is easing off those views as we speak today.
Okay. So switching gears a little bit, we're recording this discussion about a week out from the NBA draft. As co-owner of the Boston Celtics, what can you tell us about how the process of due diligence, valuations, and closing a deal for a player resembles the process that your team goes through when evaluating a portfolio company for a possible investment?
I would say the big similarity is that you have to do amazing amount of due diligence. These draft picks are the lifeblood of franchises. And so when we came to the Celtics, we brought in, we probably increased basketball spending by 8x. A huge increase in expenditure. We brought in a stats group, the Moneyball type approach. Danny Ainge and his staff are fully staffed with global scouts. And so they leave no stone unturned, because this is kind of the most important decisions every year the franchises make. And they still don't get it right all the time, just as we don't get it right in private equity. But I would say in the last 10 years, it's become much more data-driven, much more looking at the stats of a player in college and how they translate into the pros. We built a regression model. We're on our 10th version of it. 10 years ago, we started out with 1.0, now we're in 10.0 regression model, in terms of trying to correlate the factors in a player's career and how that will correlate into playing in the pros. And Danny uses all that information, plus he watches all the players and the staff watches all the players, and they've done an excellent job. I think they punched way above their weight in terms of drafting someone like Rajon Rondo at 21, who later became an all-star. And so they've got to keep doing that, because it's a very competitive league, and all the other teams are starting to put those same techniques in place. So there's been a dramatic increase in statistics, analytics, along with the basketball sense that our staff has.
Okay, well, we'll see how the draft plays out.
Well, we're hopeful. We're always hopeful.
Thank you very much, Steve.
It's great to be here. Thanks,
Bye.
Phil.